Good day to one and all. This is Dr. Sivaraman of IKnowIndices.com. It is 30th of September. I'll be giving the Asian Session Live Market Analysis and the Forecast webinar, explaining what had happened during this particular week, 26th to 30th of September. Whether the market has moved in line with that of the forecast or against. Then also we will do the market reading using the initial lows and the highs set for the day, and also discuss about that of the trading strategy. And yesterday I was giving the webinar pre and post US GDP data release. I was explaining to you that during that of the month end, whether the data is released or not, the players are expected to make the slide in the case of Euro and GBP for the month end. And the same way, I also suggested sell and buy trade in the case of Euro and GBP, and also buy and sell trade in the case of USD. And the market has moved in line with that of the expectations. I explained it during the part 2 or the post US GDP data release webinar. So you can understand that the market is predictable. When it becomes predictable, provided you know very well the behavior of the players in the market. Once you know it is a man-made market and it is predominantly controlled by that of the traders who have got huge money power to handle the market. Then accordingly, you find that those who have got the money power, they deploy the money into the market and try to earn. In the process, they do not want to have any loss at any given time. So they want to be abundantly cautious. At the same time, they want to earn money. So they have specific pattern of operating the market or making the moves in the market. And if you understand well such moves and when they are doing it, how they are doing it, and why they are doing it, then you are able to clearly understand, okay, this is the way they are going to do it during specific time frame. Okay, this trade I can choose. I can choose a buy and sell trade or a sell and buy trade, so that we'll be trading along with that of the players. So the players do buy low and sell high, or sell high and buy low. And we should also do that. But in the name of technical trades or the breakout trade, we are advised to do a buy after the rise or sell after the drop based on certain technical parameters. And invariably, the players know very well how the traders have committed the positions based on such events or based on such happenings. And accordingly, the players are in a position to trap the traders. For that, they use a very simple mechanism, create the market sentiment. And once the traders have committed positions based on the market sentiment, act against them. So automatically, the traders lose the money and the players are able to earn money without taking much of a risk. This is what every week you come across, and we give so many attributes. Because of the economic condition of US, the market is like this. Economic condition of UK, or economic condition of Europe, or economic condition of Japan, we try to give various interpretations to the other market. And we simply forget what we have been talking about 2-3 hours back or 2-3 days back. And especially the traders have got a very short memory. And so the traders were bearish, for example, when the market was pretending to be bearish. And suddenly when it reverses and become bullish, or you find quick rise in Euro and GBP, the trader find it very difficult to accept the sudden change, because our mind does not have that much of quickness for such reversal. And you know very well, the mechanism of cinematography is that when they move 16 frames of still photograph, you are not able to recognize them as still photograph, and our brain is recognizing it as a moving object, and it is an illusion. So in the same way, when such quick moves happen in the market, the mind is not in a position to understand or accept the quick change. Instead, it gives a wrong or a method of trading, namely, when the market goes from low to high, then we missed doing a buy and sell trade. The mind says, why not you do a sell and buy trade? Because it has gained already the level. So the players know very well the shortcomings of the brain ability. And when the traders sell, the players gain some more level, so that automatically the brain accepts that there is a mistake and the market has gone up further. So it is better to cut the loss and better to close the position with acceptable loss. So they close the position. Then afterwards, what happens? The market started sliding. Then the trader repents. I could have just held it with some more equity so that I would not have lost the money. So this sort of decisions continue to happen in every trader. As a result, you find the trader is trying to come out with innovative method of earning money from that other market, but they become trapped again and again because they fail to reflect on their mistakes. They fail to understand how the market is being manipulated. Then you find the market surprise induces the fear, and it gives that impression to that of the trader. When GBP goes to 1.29, it gives that imagination it could go to 1.25 or 26. Then immediately it gives the fear for you to liquidate the long position. Similarly, when they gain to 1.33, it gives the delusion that it could go to 1.36, and as a result, you close your short selling. This is what happens to the trader, and it is necessary for the trader to come out of this situation. Only then they can be a successful trader. Because there are so many traders approach me and say that I developed the system, I was trying various methods, I was able to earn little bit, but that is not enough. So I earn in a few trades and lose in other trades, and I am standing where I started. Then what is the purpose of trading? I do not know. I gained that experience being a trader, and I'll be able to trade in any market condition. But how much you earned? No, I have not earned anything significantly. In fact, I have blown out 2 accounts. That's what they say. So here they fail to understand how they are committing mistakes. Only then they will be able to rectify the mistakes, avoid repeating such mistakes. And you know, there is a saying, a fool is the one who repeats the mistakes. The wise man avoids repeating the mistake. But as far as the market is concerned, somehow, without our knowledge, we continue to become fools. So how to get rid of it? So for that, we need to understand that the players have got their own limitations. And we can understand the market, and that is being manipulated by that of the players. And if we read the intentions of the players, then we'll be able to earn nicely from that of the market. So I developed an algorithm with which I was in a position to give the forecast for the entire week on Monday. And if you could follow that and try to take accordingly the positions, then you will be able to really capture some good profit. And yesterday also, they made the slide as I explained during the late US session in the case of GBP and nominally in the case of Euro, and they are likely to again just slide during that of the US session today. So that is how for the month end they are expected to make the moves in the market. So keep in mind that the players are here to handle every market. It is not that small traders they target. No, not at all, because small traders with a mini account, they hardly earn anything. They are targeting, in fact, the institutions. They are targeting other big traders in the market. So in that process, these small traders also lose money because of the lesser equity. And many of the traders, they try to come to the trading platform with the idea, I will not use the stock and I will just take only one position and then I will try to capture the profit. Later on, go to another trade. Then when the market makes a big move against him, he realized that he could have used the stock to limit the risk. Then he thinks that it is better to average the trade so that he can easily exit out of the position. So first of all, he comes with an idea of earning money from that other market and takes the decision and assumes that his decision will be 100% true. But when the market goes against, when he has missed the opportunity of booking profit, then he is trying to come out of the position without a loss. That is the second step. Then in the process, he thinks that it is better to average it, take another sell position if he had taken a sell, or another buy position if he has taken a buy position when the market has gone against. Then he tries to close both the position with no profit, no loss. Then later on he finds that the market is making further away the position, and both the positions start making loss. Then he thinks that it is better to add some more positions, otherwise he will not be able to minimize the loss. So then after avoiding a loss, he comes to the understanding of minimizing the loss. Then take one more position so that when all of them are closed with the minimal loss, then he thinks that his equity will be preserved. And later on, he realized when the market goes against, that all the positions start making loss. He goes for a crisis management. And he realized that he has gone to that of the over trading. And then he closes the positions helplessly, or sometimes blow out the account when the equity is not allowing him to hold the position. So you find he starts with that objective of earning money from the market. Then he wants to avoid making loss. Then he wants to accept a small loss. But when it becomes big loss, he is not in a position to think or take any appropriate decision. He simply get disgusted and close that account. So this is not only to selective trader. Every trader who is entering into the market has got similar feelings. So what has to be done? We need to understand how the players are making the moves in the market. And in order to help the small traders, I am not troubling them going for such analysis. Instead, I give straight away the forecast here. And this forecast is derived during the week beginning till the end of the week. And during that particular week, there can be any variation with regard to the volume, with regard to the traders' participation, or with regard to the data release, etc. So I don't take into consideration any of those things and give the forecast. Then automatically you find this forecast has to be fine-tuned on a day-to-day basis. And this fine-tuning is being done with the help of the market reading technique. So that is a basic idea of using three components, namely the forecast, market reading, fine-tuning the forecast, then the trading strategy to limit the risk and maximize the profit so that you continue to earn money from the other market. If you are able to understand well and to follow this, then you will be the person to be benefited. So they are expected to make swing and come up during that of the Japanese and that of the European session. And we can do sell and buy trade, and afterwards they are expected to make the slide for the weekend during that of the US session. Now these are all the levels in which the currencies were expected to swing. And because of the narrow range swings, you did not come across much of a headway either on the upside or on the downside in all those currencies, the four majors and two commodity pairs. So Euro was making the swing from the 1.1191 to 1.1259. So hardly about 60 to 70 pips. Then GBP again, which was making the swing so far around 120 pips. And Yen about 175 pips. Then in the case of CHF, it has just done about 75 pips swing for the whole week. And only in the case of Canadian dollar, they made a streak upward stop end to 1.3281 and came down to 1.3049 and again started gaining the level. So a quick upward stop and then drop, dumping of the positions, and again gaining the levels from those. So they are doing either way swings in the case of commodity crosses. For the weekend, they are just trying to handle this currencies in a sequential way. That I call it as a sequential trend reversal. Then Australian dollar, they just gained from that of 0.76 area to 7,700 pips and then started making the slide again. There's a question. How you define contrarian move in numerator versus denominator currency or USD weakening or strengthening move? A contrarian move is the one, I'm just answering to the question here. A contrarian move is the one wherein in some currencies they make USD gaining, in certain other currencies they make USD weakening. So now, for example, USDN is showing positive net change. The denominator is weakened. That is why it is showing gain. Numerator is gaining more. Denominator is losing. That is why it is in positive net change. So USDN is making USD gaining move. Whereas you find Euro, which is also showing positive net change, or GBP, which is also showing nominal positive net change, wherein GBP is the numerator. So by gaining, it shows USD weakening move. So a currency showing weakening USD gaining move, another currency showing USD weakening move. That means all the currencies are not showing simultaneously USD weakening or USD gaining move. When such a situation happens, it is referred as the contrarian move. Because contrarian refers to some moving in the southern direction, certain others moving in the northern direction. That is referred as contrarian. Hope you are able to understand. Then let us do the market reading, noting down the initial lows and the highs around 3:30 GMT. Euro formed the low 1.1197 and 1.1250 is the high. They are not reached the low or the high. In the case of GBP also 1.2946 and 1.2976, they are not reached the low or the high. Then yen 100.92 is the low, 101.25 was the high. They just went up to 101.78 and come down. So they made a quick upward stop and then come down below that of the initial low, initial high, to come down again to hit the stops below before making further rise. So they make the contrarian move by making the positive net change in all the three currencies. And for the sequential trend reversal, they normally handle the commodity pairs and their crosses, then come to that of the yen and yen crosses, then the majors, and finally the European crosses. That is how they handle the currencies in sequence. So the question continues, in that situation, which currency they handle? They handle all the currencies. They handle all the currencies. Only then they are able to make some USD weakening move in certain currencies, USD gaining move in certain other currencies. And if you find, then in such a situation, a currency which they are not touching will be showing simply a consolidation. Now CHF is making a spread less than 40 pips, then they are making a consolidation here. Then there is no point in taking a position in that currency. We will not be able to make significant profit. And similarly, in the case of Canadian dollar, also not a significant move. Australian dollar also, that spread is less than 40. So they are handling now yen primarily, and all other currencies they are holding. Still, the other currencies are not made 40 pip spread between the high and the low. After that only you can take position so that you will be able to quickly book profit. Then the case of yen, as I told you, they just breached the high, went up and then come down quickly as an extended stop and on the upside before making further drop. Then in the case of CHF, 96.56 is the low, 96.69 is the high, they are not breached the low or the high. Then Canadian dollar, 31.40 is the low, 31.66 is the high. They are not breached both the high and the low. And 76. Okay, 76.15 is the low in the case of Australian dollar. 76.38 is the high. They are not breached the low or the high. So here you find, excepting yen, all other currencies, they are simply holding, making small swings. So they want to make big moves in the case of USD yen to start with, and later on they will come to other currencies during European session. Now the trade recommendations. So you can do either way trades. Here in the case of Euro and GBP, Euro you can keep a buy order 1.1155 and a sell limit order at 1.1227, and for both you can keep the hedge order to limit the risk and keep the opposite as the take profit order. We will be able to trade. And in the case of GBP, let them make further drop, then you can take a buy position. Otherwise, do a sell and buy trade also. Around that of 1.3005, you can sell, and then book profit around 1.29 area. In the case of yen, they are expected to make further downward move quickly in order to induce euro and GBP gain. At that time, you can do a buy and sell trade. Similarly, in the case of Australian dollar, they are expected to make quick downward stop and below the initial low. At that time, take a buy. Then they will gain the levels and book profit. So these are all the recommended trades for today. Try it in a demo trading platform. Understand how comfortable you are. Then these are all the timings of the market, all the 3 sessions of the day. Note down the timings and see also about the gap time between the sessions, and also understand majors they handle during early and the late sessions. Mid sessions they handle the crosses. Watch that carefully and then accordingly take during the early session the position in the major and book profit during late session as a session-wise trade. Then we will be able to really understand. We need not watch the market all the sessions. We can just watch early and the late session. Mid sessions we can just avoid watching it unless and otherwise there is a data release time. That way we will be able to really get enough rest at the same time trade and earn money from that other market. And you know that FX Street has come back with a Trader of the Year demo trading context. So you can participate in that and try to show your skill set in trading. That will help you to earn the prize besides international recognition if you are able to really come out with good trading profits. So the link is given here or in the FX trade header. You come across the last column, the menu is the context. You click that, you will get the application to enroll. For that, you just enroll and test your skill in a competition. So that you will be able to really, when you try to test your skill in a demo trading platform, then you will be able to understand how you have to change your perception, how you have to change your method of trading, how you should have the mindset to understand the market well. Then earning becomes a child's play. It is not necessarily the price. You will be able to earn from the market straight away, provided you follow the forecast, market reading, and the trading strategies. There's another question. Is it possible to find intraday trend using the contrarian move? Yes, it is possible. You should know during the early and the late session how they are going to handle it. You'll be able to find that they don't do hat trick. So 2 sessions, if they show positive net change in euro and GBP, the 3rd session they will show negative net change. You'll be able to easily find out. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar, and wish you all happy trading and a happy weekend. I'll come back on Monday and come out with a new forecast for the next week, and that is going to be the month beginning time. Again, there will be month beginning trend reversal moves in the market. Volatile moves will be seen in the market, and still you can do the swing trades and earn money effectively from the market. Wish you all the best in your trading. Try to develop the understanding which will help you to eliminate the market fear.